If interest rates go up after you've locked in your rate, it doesn't matter. You get to keep the lower rate because you have already locked it in. On the other hand, if you lock in your interest rate and rates do happen to fall, you can't take advantage of the lower rate unless your rate includes a float down option. Now, a float down option allows you to take an interest rate decrease during your rate lock period, but to take advantage of this option, expect to pay to have that available to you. Now, you can lock in your rate from the moment you receive your initial loan approval up to 5 days before closing. Some lenders may even allow you to lock in your rate when they send the loan estimate. But you must be aware that your rate lock has an expiration date, so accepting a rate too early can be dangerous because it can expire before you go to close. Now, once your rate lock period expires, your interest rate will default to the current rate regardless of whether it's an increase or decrease. Also be aware that some banks and financial institutions charge rate lock fees that often vary by the type of mortgage you're using, and you can often choose to pay this fee upfront or include it in your closing costs. Often it's up to you. Another thing you will also want to keep in mind is that if you're dealing with new construction, you will want to wait till about 60 days or less out from your closing date to start looking at locking in your rate, and make sure to speak with your lender if you're concerned about paying rate lock extension fees, because that may also influence your decision on when to lock it in.